What's up, everybody? Good afternoon. We should be live on the YouTube. We should be live in the virtual trading floor. What's up? What's up? What's up, Mike Reed? What's up, Rose? Rose Petals? What's up, John? Pam? Hello, Varun. What's up, Steve? Alright, let's get started. I am an associate member of T3 Trading Group, which is an SEC registered broker-dealer and a member of FinRecipic. All my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. There is the position disclosure. On YouTube, I can switch over a little bit there. Oh, I guess that shows them in the VTF like that too. Cool. It's been a while. It's been a while. Position disclosure. I got out of my shorts. 2 more of those covered calls I had expired in my favor. And I'm out of those. I'm not going to roll them over. I talked about it a little bit last week. And I got out of my, really on Friday. Meta hit my target, Tesla hit my target, Microsoft hit my target. All 3 were great trades. And I decided to get out of my U-Pro and T-Triple-Q shorts and kind of reassess into the weekend. Almost reshorted T-Triple-Q pre-market, held off on it. Instantly had regrets when we traded negative pre-market, and then instantly felt great about myself when we were green, which is exactly how you're not supposed to trade. You're not supposed to trade based off feelings. You're supposed to trade off of your game plan. That's really the key to the business. Game planning, right? I was talking about it with Eddie Webb a little bit. Game planning is the key to the business. So let's talk about this market a little bit. So first of all, the S&P finished up 0.5% today. The Qs are up 1.2% or so. Really strong day for the NASDAQ and really weak day for the IWM. Russell was very weak early on, down over a percentage point at one time when the Qs were fighting their way back to green from the gap down, and stayed pretty weak. Recovered, closed back above 190. It's not a bad looking candle, but closed negative still on a day when the Qs are up 1.1%. I was really concerned at one point in the day today. Let's talk about this market a little bit. I don't have strong conviction in the market right now. I just want to start by saying that. And I think it's important to recognize that. I've had really strong conviction on my market positions for most of this year. To the long side, then dealing with that 2-month consolidation that we had, and then again to the long side when we had that real breakout, and honestly to the short side at the end of July, beginning of August. And now we've had a pretty decent pullback. Not on a closing basis, on an absolute basis, we pulled back from SPY 459.44 on that first push through failure day to take notice of, and we pulled back from, again, let's just call it 460, all the way down to Friday's low of 443.34, where we breached the key 445 level as we did today, but managed to trade back above and close back above 2 days in a row. Now, we have not recaptured any of the key levels that we need to put bulls really back in control of the market and give you confirmation there. But the bulls really came in and defended themselves for 2 days in a row, and Friday was a day to take notice of in a little bit of a different way. It's not a high volume trading session. The afternoon on Friday, being a summer Friday in August, was very boring, which is what tends to happen the second half of August, particularly on Fridays. But the bears had a very real chance to break this market down on Friday. We had PPI come in a little bit hot. We gapped below 445. There's a potential breakaway gap to the downside of the market. The market was not extended to the downside, so we didn't necessarily need an oversold bounce. There were some growth stocks that were probably a little bit oversold, which I think we talked about that on Friday morning. We talked about that again this morning. But the market failed to break down. So you know, I had already covered the majority of my T-Triple-Q and my U-Pro going into Friday, and I was trying to keep a runner for this bigger potential move. And I still think it's possible, unless the bulls prove themselves by recapturing. There's 3 key highs I'm looking at. The August 10th high, which is 451.70. The August 4th high, which is 452.90. And the August 2nd high, which is 453.50. That's 3 failure candles. Interestingly enough, three major failure candles, and none of them led to huge downside moves that created really big downside extension on the daily chart or anything like that. But yet, we haven't been able to recapture those highs, and the market has kind of stayed weak, especially on the short time frame. And that led into Friday. PPI comes in hot, market cap's below 445. It was an opportunity to... Am I echoing? So hopefully I just fixed that. It was an opportunity for this market to really be able to rip lower, and bears failed to do it. Bulls pulled us back in. So it kind of changed my thought process a little bit, and gave me a little bit less conviction. So, you know, the high there made a lot of sense to me, which we discussed. Market dynamics, market sentiment, plus technical analysis were all telling us it's time for, you know, a bigger pullback. And I still think a pullback to 435 is not out of the cards. It's not unreasonable. But the fact that we couldn't do it on Friday, and then the fact that the Bears had a second chance today, you know, maybe it was just a summer Friday, maybe it was weekly expiration, whatever it is, they had another chance to rip us down again today, and failed again. So I'm like, okay, we were below 445 2 days in a row. The difference about Friday and today was that the IWM was below 190 and super relatively weak. I was very nervous this morning, but we were able to hold in. We were able to close well. So I am out of all my real bearish short positions at this point. I'll look to potentially get back involved, T-Triple-Q or U-Pro at some point soon. But those trades work great for me. And again, Tesla, Meta, Microsoft, they went exactly to my targets. I liquidated those positions with the initial plan of I'll be a little bit more greedy with U-Pro, I'll be a little bit more greedy with T-Triple-Q. But then I just decided to clean those positions up on Friday also, just because of the way the market held in and held that level, and figured I could reassess today. And in that reassessment today, the market was able to recover. So I just don't have strong conviction here. It seems to me like almost like there's an equal probability that we break above those key days and get back to being bullish, as we are going sideways, as we are breaking down a little bit lower. If anything, I almost feel like the highest probability situation right now is just going to be more sideways action. You got your big picture uptrend now is still more or less intact at higher highs and higher lows, especially if we want to pivot here and work our way higher. Our short-term downtrend is still more or less intact, so you got competing trends on the big time frame and the small time frame, and the intermediate time frame at this point is very neutral. Right? If the intermediate time frame, if you just want to look these last couple of months, you know, we broke higher, we broke lower. It's almost like we're kind of trendless and range bound. So yeah, I just don't have the same degree of conviction here. I'm kind of taking it day by day, and I just think it's worth noting that there's 2 days in a row here where bears had a real chance to rip us lower, and they failed both days. On Friday, it was off PPI. It was off a gap below 445 with the market not being extended. And today, it was the IWM. IWM relative weakness this morning was brutal. They gapped us down. Did we open below 190? Yeah, we opened up basically at 190. Just below it, quick tail above it, and then this momentum selling at the beginning of the day had me very nervous. We lost 190, we lost 189, I had longs on, and I didn't have my shorts anymore. I was very nervous that this market was going to break. The Qs at the same time were incredibly strong. The 2022 playbook, which changed a little bit since SVB, was when you got a weak IWM and a strong QQQ, the IWM weakness wins and the Qs roll over. And this is one of probably very few times over the course of the last year and a half, outside of specifically related to SVB, which weakened regional banks, which weakened IWM, while the Qs became a safety play, outside of, the heart of the SVB crisis that was causing that dynamic to play out, this is like the first time, or not the first time, but one of the few times in the last year and a half that I can really remember the Qs kind of saving and pulling up the IWM and not the other way around. Breath at one point this morning, even as the SPY was green, was deplorable. It was like 75% of the downside still. Chris was providing us that data. So I was certainly really nervous. And then the IWM was able to recapture 190, close above 190. I still believe is down on the day. Where'd my level 2 go? There it is. Yeah, IWM's still down, basically flat on the day. But now it's leaving you with a good-looking tail here. Tailed through 190, came back, closed back above. So we'll see if this leads to a further bounce. I could easily be overreading this price action. Today's volume in the SPYs was really small. One of the lighter days that we've had in a while. Just kind of across the board. It's just a really light volume trading session. It's also options expiration this week. So we'll see how this week plays out. But for the moment, we're holding in, and we're going into the summer doldrums here. This is the real summer doldrums. Is the back half of August and the beginning of September, because at least it's like June. They always say sell in May, go away. But May, I think, is actually historically a strong month, and then June always feels like normal to me. And then July hits, and I want to think that it's going to be slow, but we have earnings. And it's like really once you get through that earnings season is when things are usually really slow, which in actuality is probably just a month. The second half of August and the very beginning of September through that Labor Day week. It's really the week after Labor Day weekend where things begin to pick back up a little bit. So we'll see. I want to overread this price action. I also don't want to have tremendous amount of bearish conviction in a dull market, right? It's one of the oldest trader sayings, never short a dull market. So, yeah, that's pretty much where we're at. Impressive recovery from the bulls. In the morning meeting today, I was certainly nervous that we could still lose some key levels because the IWM was weak and was set to close below 190. At the same time, we noted that there's a bunch of these growth names that have gotten really oversold. So, one piece of the game plan was, if the market really breaks down, be careful and get out of the way. The other piece of the game plan was, if the market actually holds in somehow, which I actually felt was a lower probability, but that's what happened. If the market holds in, some of these oversold growth stocks that are extended, even though the market's not extended, could really pay. And that was one of the things that we were talking about in the meeting. I remember the conversation actually started with like PayPal a little bit, even though PayPal had news. Unity, the Trade Desk, Roku to some degree, even though it's a little bit of a different play. Palantir, a lot of these names have given really big percentage pullbacks. Granted, it's after some of them have had 100% moves. So Palantir in May was an $8 stock. It got up to $20. That's a really big move, but then it had a big pullback from $20 to $15 on what I thought was a decent earnings report. 15 being an important support level. And I was looking at Palantir. I was looking at Unity. This move here from 44 down to 36 has just been methodical. The recent high is actually 50, but this big straight down move, 1, 2, 3, 4, 5, 6, 7, 8. This would have been day 9 for Unity of basically being negative. And I'm looking at that and I'm like, wow, like I want to be buying this. And then someone in the morning meeting brought up the Trade Desk, and I'm getting some weird prints right now after hours that are messing these charts up a little bit. But someone brought up the Trade Desk on a day 4 coming into this 74 support as a potential RDR. Similar but different was Roku, right? This Roku had this phenomenal earnings report, and just off of a phenomenal earnings report, it's managed to pull back from $98.50 down to like $78, well overshooting where I thought this thing would pause on a healthy pullback. But I just think it's because they rotated a lot of money out of growth. Upstart, which is a company I do not believe in at all. We discussed last week, maybe $30. It's a big level, can kind of act as some support. It's like extremely extended into it. And again, even though this is a company that I don't like, Stocks at 30 bucks, ADMA's at $45 or $44. It's a lot. It's a lot of extension there. So there was some opportunity potentially building in some of these names, but the flip side that I was also saying was, what happens if the market actually cracks? Because, like, yeah, in a vacuum, if I wasn't worried about the market potentially losing support, I would be all over these potential RDRs and some of these weak growth stocks for a snapback trade. But what happens if that market actually breaks down? If that market actually breaks down, then maybe the $36 spot I'm trying to look at in Unity actually becomes a $32.50 spot. It'd be reasonable. Or the trade desk spot that we're looking here at 74 actually becomes, I don't know, 70. Which looks like it's a little bit of a level here on the daily chart as well. So I was just very, very nervous about the market. But the premise, I love to think about the market in terms of if-then statements. If the market could hold in, then some of these oversold growth stocks can potentially give a pretty good bounce, and that's exactly what happened. Penn was another one. It didn't give the RDR, but this Penn snapback today was excellent. I would have loved to close above $25 in Penn. We didn't quite get it, but obviously that was still a pretty good bounce back. So I think that today was a pretty good day overall, because the market didn't break down. The IWM fears I had, the market negated them, and if you still were able to focus on, some of these names where the relative strength was, where the growth was, it was an opportunity to make a few bucks for yourself today, as we kind of wait and see on how this market wants to play out. Oh, and I almost even forgot about like Amazon that call early. I don't know what's going on with these false prints right now. That's really, the charts are all over the place. This Amazon's not actually at 139. I don't know why it's doing that. Amazon is it closed at like 140.50 or so. Amazon was one of my ideas today. It's like the best looking daily chart out there. A long versus yesterday's low was really the idea. I'm not sure if anybody got stock off that, but the idea then is also to put it on your watch list. Really deep pullback midday, but closed great, looks great, closed above 140. So there's a lot of stuff out there that looks pretty good, and Amazon is certainly one of them. So that's pretty much all I have for you guys from today. As we come into the second half of August here, I'm really not trying to overly push things. Just trying to manage my positions appropriately, take the opportunities as they come, and just study this market to see if it can get into an area where it proves itself in one direction or the other. Because where we're trading right here, it's a very much a mixed signal. We're not above any key levels. We're also not below any key levels. We're right into the moving averages. We're right into the range. So it's difficult to have a tremendous amount of conviction with the market here. I would just point out, one piece of positive information is just the fact that we were able to hold in as well as we did the last couple of days. I think it's really notable because the market had the opportunity to break us down if they wanted to. So that's all I've got. That's all I got. I'm happy to take a look at any questions you guys have. From Dave. You talk a lot about game plans and how they are very important to a trader's mental discipline and profitability. If you were working with a trader who has never put a proper game plan together but does have an assumption about markets, a specific stock, then how would you have them start creating one? Sure. So I guess the question is, how do I start building a game plan? I already know how to look at markets. I already feel like I can read the market really well, but that's the piece of my game that I'm really missing. And game planning, it's just so incredibly important. I can't emphasize that enough. It's the key to mental discipline. I think it's the key to risk management, which goes hand in hand probably with mental discipline. It's much more difficult to just be long stock or be short stock, especially if you've got size, and just say, I'm not going to have a stop loss. I'm going to get out when I think it's telling me I'm wrong. You can get yourself in a lot of trouble doing that. And then on the upside, a common issue that traders sometimes have is actually booking profits too early. So having a good game plan is actually what forces you to be able to make real money and get the reward out of the risk, is by following a good structured game plan that you've already kind of developed for yourself. So a game plan starts really with trade execution. The first part I think about building out a game plan is, You know, what type of trader am I? What types of trades am I looking to take? Because there's many different types of trades and strategies that a trader can approach. You know, a lot of what we do here is technically based. A lot of what we do here is momentum based or extension based for counter trend stuff. And the first question is, well, where do I enter and where is my stop loss going to be? And figuring out the risk side. Figure out the risk side first. So where am I going to enter this position? Where and why am I going to enter this position? And then where and why am I going to have the stop loss that I'm choosing? And I think that stuff should generally be technically based. I'm getting in at this price and my risk is 20 cents on this stock or this ETF or whatever. And then the third part is how much do you want to risk? And if you're an experienced trader, I think you want to trade based on risk skew. If you're not an experienced trader, maybe you just want to have more uniform risk that same $100 in every single trade. And then as you get better, you can begin to implement risk skew. So you know where you're entering, you know where your stop loss is. All right, well, how much do I want to risk? You want to risk $100? Well, on $100 at 20 cents worth of risk means you're taking 500 shares. Now the whole downside game plan is done. I'm entering at 500 shares. I'm putting in my stop for 500 shares. Whole downside game plan is done. Then the next part of the game plan is, well, what am I doing on the reward side? And then there's so many choices and so many options, but build out the game plan ahead of time. Is this a trade where you truly feel like everything is on the side of your trade? It's an A+ trade. You want to be extremely greedy with it. You know, I've spoken a lot in an afternoon meeting last week. I think it was off of Elliot's question. We talked about the idea of trimming and trailing as defined by the market environment that you're in. So certain market environments, if it's a trending market environment, then your game plan should be a little bit greedier in the building out of a game plan that should involve trimming and trailing for booking profit. It should probably be more trailing and less trimming. In a range-bound market, like what we had, the example I was using was April and May, or the environment that we've had, honestly, for most of the month of August, where we're not really trending in the same way, especially now, to the long side, then the game plan should probably be more trimming and less trailing. And then, and I missed a huge part of it, is the trade in and of itself a counter-trend trade or a with-trend trade. You inherently should be less greedy and do more trimming and less trailing in counter-trend trades. Like the IWM trade I took today, I took a little baby trade in the IWM just off of extension. Wow, I gotta let me show off my candle dot here. Look at that. Look at those entries. Not bad. Just a real small trade, real small risk, just off the extension that was coming in, plus the time of the day. Just looking for a snapback, to equilibrium. I actually got out a little bit ahead of equilibrium as per my game plan. On a counter trend trade like this, I chose to have a game plan that was 100% trimming. I didn't trail any of it, which a lot of times I choose to do. And the only real reason why I didn't choose to trail any of it was just because of portfolio considerations. Here I got the IWM totally breaking down. I'm nervous about the fact that I'm 100% long. I don't have any of those shorts on anymore that were acting as the hedge for the last few weeks for me. And then here I am as the market's breaking down, adding on more long risk with an IWM trade. So I was like, I'm going to have a very, very, very not greedy game plan on this. It's going to be 100% trimming and 0% trailing. But on counter trend trade like this, I know the IWM fully reversed and captured 190. You got to recognize that this is a lower probability situation on what actually occurred in the IWM today. We broke below key support. We were met with heavy initial selling. The SPYs were getting below support. Fine, the Qs were holding in, but who cares about the Qs at 7 stocks? And I was, still, I was like feeling a little bit better because at after 10 o'clock, after 10:10, these SPYs recovered. They were back above 445, and the Qs were really recovered. But the IWM was still looking like it just wanted to make a 15-minute lower high correction, price correction here, and then work its way back down. So, what type of trade am I taking? Am I taking a counter trend trade? Therefore, you should be much less greedy. So those are really all the considerations that you want to be thinking about when you are, deciding on your game plan. I think if you're a new trader, keep it simple, stupid is like the best saying for new traders. It really is. because you want to get the experience under your belt. You're not really at the point yet where you can see a lot of the stuff that we might describe in an afternoon meeting after the market's already closed. You know, the multiple layers of probability that's needed to add risk skew, the more complex game planning of, you know, trimming and trailing, and how much do I want to trim and how much do I want to trail. You probably want to keep things more uniform if you're new, versus the same amount each trade, and then maybe have one game plan for when a trade is working out and you're with the trend, and one game plan for when the trade is working out and you're counter trend. The with trend one being more greedy, the counter trend one being less greedy. But then as you gain experience, you can begin to add risk skew into the risk portion of the game plan. How much do I want to enter? How much, you know, do I want to risk? Do I want to be building in with, you know, I talk about it, sometimes I'll build in without an initial stop loss because I don't have a lot of size and I can build in further. And then on the game plan for reward, you know, do I want to do some of the cash flow trading that I spend some time talking about in the afternoon meetings with a percentage of my position? Do I just want to, you know, trim some to make sure I'm making money in it no matter what and just have that stock, you know, kind of off the table? Do I want to be super greedy here and really look to trail and really look to swing the position? So you start with these simple game plans and then you complicate them over time to your benefit. I'm still a believer, again, in keeping things relatively simple as much as you can. At the same time, we need to recognize that some degree of complexity to game planning, as you can have more tier size and more dollar risk, can really add on to profitability. So, appreciate the question, Dave, and I hope it helps. Hedge funds have reduced their China exposure heavily. Just reading Steve here. Thanks for the link, Steve. We'll take a look at that after. Looks like I covered everything in the VTF. What's going on here in YouTube from Robert? What is your opinion about X, US Steel? Potential buyer is CLF, which X rejected, but still we're showing strength during the day. My plan was once X rejected the offer, there's no reason to stay up. Yeah, I disagree with that. And then we saw that second offer come in from that other company at $35 during the day today. So I spoke about US Steel in the morning meeting today, and I was really pretty bullish on it, and also pre-market. I just didn't take it because of my overall portfolio long concentration. I decided not to be involved. But I really liked buying some US Steel above $28 today, and it reminded me, similar but different, because very, very different companies, of the SSYS play that I had kind of back in here when I caught this move to, you know, above 20 from 14 bucks or so, which was really good for me. You know, I'm paying attention. I like, and this is new. This is new for me. I'm still improving as a trader, which is fantastic. I'm really happy. You know, forever, for years and years and years, my thought process was, as soon as any sort of buyout announcement is announced for any type of stock, I'm out. I want nothing to do with it. I don't feel like I have an advantage. I still feel like that's true for deals that are actually set to happen. You know, not a great example, but Microsoft wants to buy Activision, or, you know, most of the time when you see the buyout occur, the only thing that's holding it back is antitrust concerns. So if it's a $50 stock buyout, the stock trades at, you know, $49. And, you know, you might say, well, I could buy at $49, and when the deal goes through, then I make $1. And that's accurate. But you might buy at $49 and the deal doesn't go through and it's back at $34. And I don't like that risk reward, and I don't feel like I have an advantage, and, you know, it just isn't what I like to do. The buyout deals that I've been finding myself actually getting involved in, and it's been pretty consistently profitable for me, and I didn't do it with US Steel today, but it would have been another one that worked. I'm like 3 for 3 thus far. This would have been 4 for 4. Is actually when the company that's getting bought out rejects it. And the idea is the value, right? So this morning we see a $32.50 offer come in from CLF. US Steel rejects it, right? So stock trading at $28. If the deal got done, that's a huge huge premium. It's not like a small premium. 28 versus 32.50 is big. And why is the deal not getting done? The deal's not getting done because the executives at US Steel say 32.50 is ridiculous. We're worth much more than that. So now I'm looking at a situation that could play out as follows. CLF is interested at 32.50. US Steel says no way. It's not enough money for the company that we are. We've been in business since 1901. Are you kidding me? And a couple things can happen. First of all, the executives are saying, as a standalone company, whether we get bought out or not, we're worth more than 32.50. Okay, you gotta be a little bit careful, right? Because sometimes these executives, they can be a little inflated in their head, and if that's true, then why was the stock trading at $22, $23 to begin with? But it's still notable that they think that they're worth more than that. But then a whole slew of other factors begins to come in. Well, what if CLF increases that bid, right? That's what happened with SSYS. SSYS is a little bit of a complicated situation, but then, you know, with SSYS, the NMDM just kept, you know, raising their stake and raising their price point, and then I think another company, was it 3D, got involved? Yeah, 3D got involved, and then Triple D made a high bid also. So now I got two companies for SSYS that are coming in and battling each other, and the companies were trying to reject both of them because they think that they're worth more. So with CLF, I feel comfortable owning CLF at $28. I don't even care that it was just at 23. The stock was at, you know, $28 back in February and March. I like commodity plays right now in general. I mean, now we're just talking about my thought processes and my biases. I like commodity plays right now in general. I like value names, like energy names right now in general. I wouldn't be crying. I mean, I wouldn't be happy. I wouldn't be crying if I was stuck in US Steel at $28 and it traded back to 26. Hopefully I stop myself out somewhere, but I'd be fine with it. But I'm just thinking, you know, CLF could come in now and raise their bid. Someone else could come in and make a bid for the company, and US Steel thinks that they're worth more than $32.50. So I like the idea of owning some stock in US Steel at $28 when the first potential bid is $32.50. Let alone down the net. And then what happened? The next bid came in from a different company. And this is exactly what I was talking about in the morning meeting at $35. That happened right here at $2.50. Now all of a sudden we have a potential bidding war going on for US Steel that's got multiple players in it. It's not done yet. And it worked great. It worked great. So we'll see. I'm just seeing Varun here saying, my metals and mining UBS investment banking team tried to sell US Steel to POSCO for $95 per share in 2007. And you're saying that US Steel won't sell under 70? That's what you think? Wow. I mean, that's a heck of a price. But yeah, that is my thought process on it, Robert. Yep, no problem. From Eddie Vick back here in the VTF. What are your thoughts on HD, Target, and Walmart and retail earnings in general this week? Do you consider Walmart to be technically overbought at this point? I'm decently bullish on retail coming into it. Of course, I have no idea. You know, you never know what anything's going to report. But I'm decently bullish. Target had gotten wrecked. People were trying to tighten their belt a little bit. I think like JCPenney started improving, and like was JCPenney? What's the other one? TJX. And then TJX was improving almost because Target was weakening out because of economy concerns. The Target one's going to be really interesting now. Because it tends to be a little bit of a higher price point than like a TJX, so that's gonna be like I think a particularly interesting report. Home Depot, I have no idea. That's also usually an interesting one. And Walmart's had a big run, but I wouldn't consider it to be overbought. I would not consider it to be overbought, and I would not be surprised if that one performs well on its report. But we'll see how it plays out. You never know. That's just all. As Josh would say, bageled ahead. Josh saying I think X ends up going for $45 to $50. Cool. Anything else, gang? Or shall we wrap it up? VTF looks good. YouTube looks good. If you're on YouTube, press that thumbs up button for me. And that's it. Have a great night. See you all tomorrow. Tomorrow is Tuesday. See you guys tomorrow.